Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. If you like to read what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. Real estate investment trusts like KKR Real Estate Finance Trust, Inc., traded on New York Stock Exchange under symbol KREF, receive a big jolt in early November after the Federal Reserve left its key interest rates unchanged. In mid-December, the Fed held its interest rates again and signaled that multiple rate cuts could be coming in 2024. And why is this a good news for mortgage REITs? Mortgage REITs invest in mortgages instead of real estate. They provide financing for income-generating real estate by purchasing or originating mortgages and mortgage-backed securities, earning income from interest on those investments. When interest rates are zero, it can mean less money is coming in and lower profits. But higher rates are great for MREITs in general. And it's a big bonus for MREITs with a lot of floating rate loans. And even though interest rate cuts are coming in 2024, they're still expected to remain well above pre-pandemic levels. John?
Yeah, thanks, Bo. KKR Real Estate Finance Trust is, as you mentioned, an MREIT that focuses on originating and acquiring senior secured loans by commercial real estate assets, or CRE. Focuses attention on CRE assets, which includes institutional, multifamily, office, hospitality, and industrial properties that are owned and operated by well-capitalized sponsors and located in top markets and with strong underlying fundamentals. Its target assets also include mezzanine loans, preferred equity, and other debt-oriented instruments. With offices in 16 cities and 11 countries, KKR Real Estate currently has approximately $64 billion of assets under management. Now, the average loan size is pretty decent at $124 million. Of its current loan portfolio of $7.8 billion, 99% is made up of floating loan rates with an average unlevered all-in yield of 8.9%. And it's obviously good at what it does. And 67% of its clients are repeat borrowers.
And John, I read on incomeinvestors.com that this company swung to profit in the third quarter and reported 31 cents per share.
Yeah. For the third quarter ended September 30th, 2023, KKR Real Estate reported net income of $21.4 million, or 31 cents per share. Now that's compared to net loss of $25.8 million, or a loss of 37 cents per share in the third quarter of 2022. For income hogs, it reported distributable earnings of $17.4 million, or 25 cents per share. Now that's down from $33.1 million, or 48 per share in the second quarter, actually, of 2023. Now during the quarter, it funded $164.9 million for loans closed in previous quarters and received loan payments of $152.3 million.
It declared a fourth quarter distribution of 43 cents per share.
Yeah, KKR Real Estate only went public in 2017, but it's raised its quarterly dividends a few times since then. Currently provides a dividend of 43 cents per share, or $1.72 per share on an annual basis, for a current yield of 13%. And again, to put that into context, that's way above the current inflation rate of 3.1%.
And here's something interesting. KREF shares have rallied more than 25% since November 2023.
If you look at the KREF chart at incomeinvestors.com, you'll notice that it began to trend lower in early 2022. Not so coincidentally, that's when the Federal Reserve began its unprecedented rate hike policy. From March 2022 through July 2023, Fed raised its key lending rate 11 times, from near zero to a target range of 5.25 to 5.5%. And as already noted, higher interest rates make it more difficult to borrow. But with inflation cooling and the odds of a U.S. avoiding recession growing, the Fed has paused raising rates and is expected to announce the first rate cut maybe in the first half of 2024. And now, again, I even think you mentioned this, that higher interest rates are great for traditional and alternative banks, but it still makes it more expensive to borrow. Lower interest rates should, though, bring in more borrowers from the sidelines, which should in turn help juice the profits of leading MREITs like KKR Real Estate. And so far, investors seem to agree. KREF stock has been climbing significantly higher since the Fed paused its rate in early November. Now, as of this recording, KREF stock is up 23% over the last 3 months and 28% since November 1st, 2023.
Thank you so much for your analysis. KKR Real Estate is a great REIT that saw its share price take a hit during the Federal Reserve's aggressive interest rate hike cycle. But with interest rate hike cycle likely over and cuts beginning in 2024, the macro and microeconomic outlook for KREF and other mortgage REITs remain robust. And Wall Street agrees here. KREF shares are up more than 25% since the start of November 2023. Moreover, 73.7% of the company shares are held by institutional investors who tend to be on the conservative side. The outlook for KREF stock and its dividend remains excellent. In 2024, Wall Street analysts expect KKR real estate earnings climb to $1.55 per share from $1.25 per share in 2023. That's it for today, and make sure to go to incomeinvestors.com to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.